is our second webinar of the series of IFRS Sustainability Disclosure Standards. And it is on IFRS S1. So we will focus on the requirements of S1 and its implementation in Pakistan. We have, so I am Rohma and I am the climate consultant at Resources Future, and we are hosting this webinar in collaboration with KRW. And we have Mr. Sohail Akram Malik from KRW with us. Sohail Akram Malik is the IFRS Accounting, Tax and Sustainability Advisor at KRW, and he has also been serving on the Sustainability Reporting Working Group as well as the State Bank of Pakistan's Working Group on International Standards Adoption. So before we begin, a few housekeeping rules. We request everyone to stay muted and use the chat box for questions. And we'll be answering them at the end of the session. So last 10 minutes will be question answer sessions. Also, this session is being recorded and it will be available on our YouTube. I've shared the link in the chat box already. So with this, we begin. And first of all, I think we'll have a Menti session. So I request everyone to go to menti.com and use the code 67043280 to join, and we'll have a small question answer session just to know our audience. You could also scan the QR code on the right bottom of the slide. So I hope everyone has joined, and yes, so what are you hoping to gain from today's webinar? I want to understand what are the key requirements, and I see that case studies, everyone appreciates good case studies and global practices. So, okay, that's great. All right. Interesting. Okay, so I see that everyone here, most of the people, they are interested in understanding the key requirements of S1, and it's always helpful to have global best practices or practical examples. All right, then the next question we have is, how familiar are you with the IFRS S1 standard? Okay, so right now, 83% of people have heard of it. So I think most of you are familiar with S1, that it exists, but you would like to understand more on what are the key requirements and how it is implemented. Okay. So have you attended any other webinars or trainings on S1 before this webinar? I hope everyone is able to access the Mentimeter questions. Okay, we'll move on. And lastly, So is your organization expected to be reporting in the fiscal year 2025? Because SCP, like everyone knows, has adopted S1 and S2 standards. So there are two people saying yes. All right. All right, everyone. Thank you. This was very helpful for us as well. And we are going to then try to tailor the session according to the answers we have received. And now I invite Sohail Akram to start the presentation. Thank you.
Assalamu alaikum everyone, and thank you, Rohma, for the introduction. I'm sharing my slides. I believe everyone can see. Rohma, is this visible?
Yes, yes, it's visible.
Thank you. A special thanks to all participants for joining this session. Today, we will examine IFRS Sustainability Disclosure Standard 1, which is the foundational standard issued by the International Sustainability Standards Board for corporate sustainability reporting. In this session, I will try to cover the growing relevance and importance of sustainability reporting. What IFRS S1 means for corporate sustainability reporting, its core concepts and the guidance it provides for corporate sustainability reporting. We will be also looking at how sustainability reporting is being adopted in Pakistan, as Romy just mentioned that CCP has adopted IFRS S1 and S2 for corporates. And finally, I will share the key challenges in implementing sustainability reporting and a way forward for effective execution and implementation. So when we look at our planet from space, this is what we see. I believe it's a beautiful interconnected world with no borders. And the planet appears as a unified whole. There are no lines separating countries. This also highlights that our resources are shared and the challenges we face, like climate change, resource depletion, pollution, also have no borders. Just as carbon emissions is in one region impact the whole world, social injustice and poor governance in one sector or country can create systematic risks for all. Therefore, as residents of this planet, achieving sustainable development is a shared and collective responsibility. And in this context, businesses play a crucial role. They must play their role in advancing the sustainable agenda, ensuring that their actions contribute to a healthier and a more resilient world for all. One key way they do this is through sustainability reporting, which provides vital information about ESG to decision makers. This transparency will also allow us to make informed choices about the companies we invest in, the products we consume, and the collective future we shape together. So sustainability reporting and sustainable growth are interconnected, interlinked, and it's a shared responsibility. It's a collective responsibility for all of us, and businesses have a very crucial and important role in ensuring this sustainable growth. So now let's explore how businesses and corporations are interconnected with sustainability-related efforts and why the reporting is important. We know that companies generally use inputs obtained from different resources like water, energy, and material, and they get economic benefits. And these economic benefits are generally reflected in their financial statements. However, business activities also impact environment, and their operations result in waste, emissions, etc. Then the organization's activities also affect society, employees, and other stakeholders. Therefore, the way an entity or a company or any business manages these impacts play a crucial role in its ability to sustain and enhance long-term value creation. Conversely, negative environmental, social, and governance, that is ESG consequences, can significantly hinder a business prospects. If we look at the examples of these ESG or environment, social, and governance risks, examples of environment risks could be loss of company infrastructure due to wildfire, supply chain disruptions due to floods. Then there could be regulatory changes with the imposition of carbon taxes. So these are all examples of environment-related risks. The social risks could be like loss of key suppliers due to non-compliance with the labor laws, like they were involved in child labor or forced labor, inadequate safety measures leading to accidents or health issues for employees or customers. And if we take an example of governance risk, it could be like involvement in unethical practices or bribery, or there could be lack of diversity in the board or within the employees. So these are the governance risks, and they can translate into financial risks. These examples are few of the ESG-related risks, and they can affect the sustainability or existence of companies. Now, why all this has got traction and sustainability has become the talk of the town? The reason has been that investors have increasingly emphasized, investors are those that provide funds to companies. Investors have increasingly emphasized that the financial statements alone do not provide a complete picture of a company's performance. As I just mentioned, that financial statements provide information about the economic benefits, they provide information in the financial terms, and generally on the historical data. And the investors have been calling for more consistent, comprehensive, and comparable sustainability-related information to better assess an organization's long-term viability. As a result, now with the global demand for sustainability, it is no longer a nice-to-have thing, rather it's a must-have component of corporate reporting. Before moving towards IFRS S1, I believe it's important to understand that why this standard was developed and the role of IFRS Sustainability Standards Board in its development. ISSB, the International Sustainability Standards Board, was established in 2021. It was established by the IFRS Foundation. IFRS Foundation has another board, which is IFRS Accounting Standard Board, or IFRS, which develops the ISP International Accounting Standards Board, which develops the IFRS accounting standards. So now there are two boards within IFRS Foundation. One is working on sustainability reporting, and one is working for the corporate financial reporting, that is IFRS standards. If we look at the slide, we will see that there are different organizations or standards that are mentioned. And before ISSB, there were many different organizations with different frameworks, like the SASB, or Sustainability Accounting Standards Board, developed the value reporting, developed by Value Reporting Foundation. TCFT was developed by a task force that was set up by Financial Stability Board. And we had GRI, we had also different initiatives and frameworks developed by jurisdictions. All this transpires that pre-ISSB formation, that was in 2021, sustainability reporting landscape was highly fragmented. with multiple competing frameworks, standards, and disclosure requirements. And all this created a significant challenges for companies and investors, as lack of standardization impacted comparability and global recognition. So in one jurisdiction, the financial or the sustainability reporting was done through PCFD, while in other jurisdictions, SASB standards were considered for sustainability reporting. So there was lack of comparability within the same sectors. And this is the reason that a global organization like ISSB has been established. And the ISSB has been formed with the resolve to issue this by consolidating the major frameworks. So they have not reinvented the wheel. They have used the existing frameworks like TCFD or SASB and GRI to some extent, and they have come up with a single baseline for corporate sustainability reporting. What this will do is that it will ensure consistency, comparability, and decision useful sustainability disclosures that are expected to provide relevant information to all the stakeholders, especially investors. So as I mentioned earlier, that investors have been demanding for more information about companies, and they have been pointing out that financial statements are not sufficient. They do not give the complete picture of any organization. To meet this information need, the investors, the sustainability related information, that is ESG, is now connected with the financial reporting. And we will see when we look at the IFRS S1 that how it's interconnected, or how they are interconnected with financial reporting. And in this way, the expectation is that investors will have a complete picture of an organization. So they will have the information through financial statements, and they will have the information about sustainability related risks or ESG related risks and opportunities through this sustainability report. And we can see on this slide that the complete picture is achieved when these two reports are presented to the investors and other stakeholders. The financial reporting is done through IFRS accounting standards, or can be done through any other standard like just GAAP or local standards or NPO standards. And then the sustainability report related information, which is independent or neutral of the financial reporting framework being used by any entity, can be drawn and can be provided through the IFRS sustainability disclosure standards that are being developed by ISSB, and IFRS S1 is the foundational or the core standard that they have issued in the last year. Now moving towards these standards. So far, ISSB has issued two standards on sustainability reporting. They are IFRS S1 and IFRS S2. S1 is the general standard on the general requirements, and we will be looking at it in depth. While IFRS S2 is a more specific thematic standard, which focuses on disclosures related to climate-related risks and opportunities. These are the first two standards, and ISSB started the work on climate related standard because it was believed that this is the key or the most important area in terms of sustainability reporting, and a framework was required at the earliest. So they have come up with S2. Now working on two projects. One is on biodiversity and the other one is on human capital. They are working on this, and it is expected that they might come out with standards on these two topics. And as we move forward in coming years, further standards are expected. ISSB's work as far as sustainability standard development is involved. It involves two sort of standards. One is one can be termed as thematic standard, Like climate is a thematic standard. It relates to all entities. It relates to us. It relates to Unilever. It relates to automobile industry, all sectors. So it's a thematic standard which can be used or which can be relevant for different sectors, industries. And then it will, ISSB will also come or issue with industry-specific standards. They have not indicated what sort of standards those would be, but they have provided within their overall work plans that these standards would be under their consideration for development and issuance. So for now, we have two standards, IFRS S1 and IFRS S2. IFRS S1 is the general standard, which outlines the requirements for sustainability-related disclosures, and we will have a take a closer look at this standard in the upcoming slides. So what IFRS S1 requires? The name of the standard is General Requirements for Disclosures of Sustainability-Related Financial Information. So as the name suggests, that it's a general standard. It is an overarching standard for those familiar with IFRS financial reporting or IFRS standards. It is similar to IS1 and IS8 as it establishes the core concepts and provides a framework for sustainability reporting. What it requires is that it requires you to disclose sustainability-related risks and opportunities. And the objective of these disclosures should be to help primary users of financial reporting and sustainability reporting to make informed decisions about the entity. So now comes the question that who are the primary users? The primary users for sustainability reporting of any entity as far as the S1 is concerned are similar to those who are involved in the financial reporting. So the primary users for financial reporting are financial statements of entity are the providers of finance, investors, shareholders, prospective investors, creditors, lenders. These are the primary users. And the sustainability reporting or the standards and the disclosures that have been outlined or will be outlined in coming years would be around the needs of these primary users. Then another aspect, if we look at IFRS S1 is that it requires us to disclose material information about sustainability related risks and opportunities. So there are a few terms that are used here. First is the sustainability related risks and opportunities. And in terms of sustainability related risks and opportunities, an important element is the requirement to disclose material information. The standard contains the concept of materiality, and it has borrowed this concept from accounting standard IS8. And the concept is that information is material if its omission or its alteration affects or can affect the decision making of prime users. So there's no threshold, there's no benchmark. Entity has to use its judgment to consider and determine what is material. So the first point is to not disclose all risks and opportunities. To not disclose all risks and opportunities that are related to ESG. Rather, the focus or the identification process would be around the material risks and opportunities. And the second aspect is that risks and opportunities, because I mentioned that the focus of ISSB's work or IFRS S1 and other sustainability reporting standards would be around investors' needs. So the disclosure of sustainability related risks and opportunities as per IS1 should be those risks and opportunities which are expected to affect the cash flows of entity or access to finance or cost of capital. So generally those that can be related to some financial impact need disclosure. And this disclosure then should be on a time horizon like long-term, short-term, and medium-term. Now the main part is that what is sustainability-related risks and opportunities. I can share a few examples to make it easier. So these are basically ESG, environment, social, and governance risks and opportunities. And an example of a risk could be a physical risk. So, for example, because of climate change, there is a risk or increased risk of increased frequency of wildfires or floods. So, and these can or potentially can impact the supply chain or business operations of an entity. And when the business operations of an entity are affected, it's generally going to affect their performance. It's going to affect financially. So this is the relationship between risks and their impacts. Another risk could be change in the regulatory requirement, where the government or any regulatory body imposes carbon taxes, and this would increase the cost of doing business unless we are compliant or the entity is compliant with the requirements of the regulator. A bank's credit risk could be related to its portfolio. So, for example, if bank has lended money and the portfolio is the entities which are in that portfolio have exposure to ESG factors, then the recoverability of that lending is exposed, and the bank might have provisioning within the portfolio. Another example that I can relate to is like water, and water is one of the key ingredients for any beverage company like Coca-Cola. And if water resources become lesser in certain regions, this could disrupt the operations of a beverage company. And what would be the impact is reduced production, potential plant shutdowns, or delays in manufacturing. And this could lead to supply chain disruptions and negative impacts on cash flows and performance and profitability for company. So these are the few examples of the risk. On the other side, opportunities, because of the risk, there are always opportunities. So a very classical example of an opportunity is that in automobile sector, there's an opportunity for electrical vehicles. So, and there's a growing trend and focus in this area amongst the automobile manufacturers. So this is an opportunity to grow, to come up with a new product. Similarly, we have witnessed opportunities for renewable energy like solar panels in Pakistan and across the world. So these are the few examples of opportunities that can come up with ESG factors. Another example of risk that could be related to employees, if employees have skill gap, and for example, employees need or the entity is required to have sustainability reporting, but because of the skill gap, it cannot do so. So there is an exposure that it will not be able to meet the requirements of the regulator, and it will not be able to implement the standard, and that lack of implementation can have consequences. So besides environmental, there could be social risks as well, like this one. And then the governance risk, as I mentioned, that if it is found out that some companies involved in bribery or fraud, it can lead to repercussions. Similarly, diversity in the board, like for example, in Pakistan, listed companies are required to have one director on the board. So this is an example of how the regulators are now requiring more diversified leadership, and non-compliance with that can have risks like reputational risks or financial risks. Another element that IFRS S1 covers is that it sets out concepts and guidance. As I mentioned, that it is It is to some extent similar to the IFRS accounting standard, IS1 and IS8, and it outlines some central and core areas which are helpful and useful when making sustainability reports. So an entity shall disclose material information about sustainability related risks and opportunities. And those material information should be presented in their reports, and the information that is considered material would be based on the judgment of the management, and the guidance provided with the standard is that if its omission is going to impact the users of sustainability report. So this is again similar to what we have in IS 8, the International Accounting Standard 8, that contains the definition of materiality, and in fact ISSB or IFRS S1 has copied that definition and borrowed that concept. As far as the reporting entity is concerned, IFRS S1 requires that the sustainability-related disclosures shall be for the same reporting entity as the related financial statements. So if an entity is preparing financial statements, the same entity is required to prepare a sustainability report as per IFRS S1. The reporting period of the sustainability report and the financial statements should be same. So for example, if a company or any organization is preparing a sustainability report, let's say for December 2025, if the financial statements is for December 2025 year end, the sustainability report should be for the same period, and it should be cut off by 31st of December 2025. And the apparent and very logical reason for this is that the both have documents, or the both reports, sustainability and financial, have to be read together so that any reader or user of financial statement and these reports can have a complete picture of the organization. Then the standard requires that if we are following IFRS S1 and other standards issued by the International Sustainability Standards Board, then we are required to give a statement of compliance, which gives an indication that we have complied with all the requirements of these standards. An important element is that there should be a connection between financial reporting and sustainability reporting, and the sustainability report shall identify sustainability-related financial disclosures relate, and then the currency within the sustainability report should be same that is used for the financial reporting. Then there's a concept or guidance about correction of errors. So if we have identified any error in our sustainability report, then this guidance would be used, and it is similar to IS8 guidance. And the standard also requires us to describe and disclose the judgments that we made when reporting. Another important element that is within IFRS S1 is that it indicates and it provides guidance that what sort of frameworks we are required to use. So the first part is that it requires ISSB issued standards. So for example, we have IFRS S2 on climate related risks and opportunities. It requires that for climate related risks and opportunities, we need to follow IFRS S2. And we can also refer to and consider SASB standards. A brief intro about SASB standards, or sustainability accounting standards, board issued standards, are that they were developed by Value Reporting Foundation, but nowadays those frameworks and those standards have been taken over by ISSB. Basically, these standards were developed in context of US market. So there are certain requirements. There were certain requirements which were linked to US regulations and requirements, but ISSB has modified them and made them neutral to jurisdictions. The important aspect about SASB standards is that 77 standards were issued, And these are industry-specific standards. So one standard is, let's say, for insurance, one is for commercial banks, one is for automobiles, so one is for mining, etc. So they have come up with 77 standards, and each standard is relevant and for a specific industry. So IFRS S1 requires that we are required to follow those standards which have been issued by ISSB. So I gave an example of IFRS S2. We need to follow that when we are applying IFRS 1 or when we are implementing IFRS S1. Secondly, we need to follow SASB standards to see that if there is any industry-specific requirement that is relevant to us. And lastly, it also outlines, IFRS S1 also outlines that we can, in addition to above two, consider other standards. So for example, if we need to give information about, let's say, water, so we can consider including disclosures based on the standards like industry relevant pronouncements. For example, the CDSP framework, application guidance for water-related disclosures or biodiversity-related disclosures. So the other standards can also be used and referred to within our disclosures. Now moving towards the core concepts of IFRS S1. IFRS S1 has again borrowed the core content from TCFD framework. Those who are familiar with TCFD framework would identify that it contains four pillars, four elements: governance, strategy, risk management, metrics, and targets. And TCFD framework was basically around climate disclosures, and it required disclosures about climate-related risks and opportunities based on these four pillars. So the entities were required to give information about their governance, strategy, risk management, and the related metrics and targets set for climate-related risks and opportunities. The overall concept has been adopted or adopted by International Sustainability Standards Board. And now for every sustainability-related risk and opportunity, a company is required to give information about governance, strategy, risk management, matrix. So for example, besides IFRS S2, which includes these components around climate risk and opportunities, if an entity is required to give information, let's say about water-related risks and opportunities or biodiversity-related risks and opportunities, then still they need to be information that what they're doing around governance, how they have strategized, what is the risk management process, and what metrics and targets they have set to achieve the desired outcome. So if we look at the governance is basically an explanation of process, controls and procedures to report an entity's use of sustainability-related risks and opportunities. So it provides answers to questions, for example, who is or amongst the overall organization governing body, who is responsible for sustainability-related risks and opportunities, whether it's board of directors, whether they have formed or delegated a committee, or whether it's an audit committee or another separate committee. What are the skills and competencies of those who are involved amongst the governance, and what is the frequency of receiving information from management about sustainability-related risks and opportunities. It also provides information that what sort of decisions they make and types of targets they set. And it also requires disclosure about any compensation or remuneration that is linked to sustainability-related risks and opportunities. So this is a high-level disclosure, which is more of a descriptive, and it outlines the entity's overall governance model around sustainability-related risks and opportunities. When we come to strategy, it explains the approach the entity uses to manage sustainability-related risks and opportunities, and it answers the question that what are the risks and opportunities. So, for example, emissions is a risk. So if it has been identified, the strategy will outline that, and then it will outline that how this risk is being mitigated, what is the time horizon that it is expected to occur. If it is climate-related risk, then there should be information that whether it's a physical risk or transition risk, what type of effect it can have on the entity, and what is the strategy or response to those identified effects. So this is covered in strategy. In risk management, the company is required to give information that how it identifies, assesses, manages risks. And lastly, if we move towards objectives to metrics and targets, these cover two elements. One is the metrics and the other is targets. And the objective is to enable users of financial reports to understand how you have performed and progressed in relation to sustainability-related risk and opportunities. So, for example, a metric could be reduction in emissions or greenhouse gases. And the target could be a reduction of greenhouse gases by 30% by 2030. Another metric could be increased number of women in leadership role within the organization. And then the target can be set that we need to have X number of employees or percentage of employees within our leadership roles. Another example of metric could be reduction in fossil fuel-based energy use. And then we need to also put in some target so that our progress over the years can be monitored and measured against those targets. So this is the overall concept within IFRS S1, and it requires disclosure about all sustainability-related risks and opportunities. All means that the entity is required to disclose around these four areas. Again, governance, strategy, risk management, and metrics and targets. Now, IFRS S1 also outlines that what should be the timing of sustainability reporting and where this sustainability report should be located. So I quickly mentioned that as far as the timing is concerned, its timing should be same as the financial statement. So if I take the example of corporates or companies in Pakistan, they are required to present their annual reports within 120 days of the year end, their respective year ends. So a sustainability report should be also presented by the same timeline as per IFRS S1. As far as the presentation or the location where this report should be, there's IFRS S1 has not prescribed a specific location. So an entity can present as within the annual report, within management commentary, and discuss its sustainability-related risks and opportunities, or it can come up with a separate report which can be termed as sustainability report, and then that report can be cross-linked with the annual report. Or the financial statements and other aspects that are covered in the annual report. So it's up to entities, provided that or unless a regulator in that jurisdiction has prescribed certain requirement or certain location for sustainability report. So this element is important in context of Pakistan, because in Pakistan, secp, when adopting IFRS S1 and S2, has mentioned that sustainability report should be after the director's report and before the financial statements. So they have identified where it should be placed within the annual report after the director's report. Now, coming towards the adoption of IFRS S1 and S2, SSCP has adopted a phased rollout. They have issued the notification through which they have adopted IFRS S1 and S2. So in summary, these standards are going to be applicable in Pakistan, and SSCP has indicated that through a binding notification for all those who are within or going to be within the scope of adoption. It has come up with a phase rollout, and the idea behind this phase rollout is that the entities over the years will have gradually will have expertise, and the entities which are at the higher spectrum in terms of size or nature, would be first one to adopt the standards, and then gradually other entities will follow. The adoption process is based on criteria. I will quickly explain that criteria in the coming slide. And the mandatory sustainability reporting has been specified by SCP. So once the reporting period kicks in, the sustainability report is a mandatory requirement for those who are required to follow based on the criteria. So phase one is the largest listed companies. I will explain what does largest mean. Phase two would be second tier of listed companies who are not within the phase one. And lastly, phase three would cover the companies which are listed companies as well as public interest companies, and listed companies would be those who were not within phase one and phase two. Phase one, phase two, and phase three for listed companies is based on certain thresholds, certain criteria. And there are three elements to this criteria: annual turnover, number of employees, and total assets. In phase one, any company which meets, a listed company which meets any of the two criteria, annual turnover, number of employees, or total assets, if it meets any two of these three, it will fall in phase one, and it will be applicable. And the sustainability reporting standard IFRS S1 and S2 will be applicable from 1st of January 2025. So if their annual period starts from 1st January 2025, they will be required to make their annual reports. And the timeline after 12 months would be like 31st December of 2025. In phase two, the second tier of companies, and again, based on these three criteria, the turnover, number of employees, and total assets, if they fall or they meet any of two requirements or criteria, they would be in phase two. And in phase three, the remaining listed companies who were not in phase one and phase two, plus the public interest companies, would be required to provide sustainability reporting. Phase one is starting from 1st of January 2025, next year. Phase two is starting from 1st of January 2026, and phase three is from 2027 January. Now moving towards the implementation considerations. Few other important aspects related to sustainability reporting and its implementation in Pakistan is that climate-related reporting is required in the first year. So, for example, if the company is required to prepare sustainability report beginning from 1st of January 2025, climate-related disclosures that is under IFRS S2 are also required. Then scope 3 emissions. Those who are not familiar with this term, there are three sort of emissions: scope 1, scope 2, and scope 3. These are within IFRS S2 and explained in great detail in that standard, and they are related to climate-related risks and opportunities. So scope 3 are basically which are downstream and upstream to the entity. Scope 1 are those which are emitted or by us as an organization within our control. Scope 2 are those which are result of use of energy by us. And scope 3 are the other emissions which are downstream and upstream. So, for example, employee-related, our investments related, etc. These are within scope 3, and the entity is required in Pakistan, a company that is adopting or implementing standard from second year. They are required to disclose scope 3 emissions, and these are difficult to measure. So that's why transitional relief has been provided by SCP. Then there is expanded reporting from third year, which means that the other sustainability related topics, like for example water, if that's relevant, biodiversity, human capital, or other elements that are relevant to a specific industry or company, they would kick in or they would be applicable from the second year, not from the first year. Then there's a mandatory requirement for assurance. That is an independent, like we have independent auditors for financial statements. So there should be an independent assurance report from an auditor or a consultant on the company's sustainability report. This requirement would be from the second year of adoption or implementation. And before the effective dates, that is January 2025 or 2026 or 2027, whatever is applicable to an entity or a company in Pakistan, they are permitted to early adopt these standards. In the last two slides, we also believe that with the adoption or with the implementation of sustainability reporting in Pakistan, IFRS S1, and the other standards, there could be significant challenges. So, in context of availability of resources, limited expertise and knowledge in sustainability reporting within organizations, particularly in emerging markets like Pakistan, is a big challenge. And then in terms of resource constraints, compliance with IFRS S1 requires investments in training, technology, and process changes, and possible financial and staffing limitations hinder the ability to effectively implement sustainability standards, as organizations are expected to struggle to allocate necessary resources. Then there's a lack of modern systems to capture data, to aggregate data. That's also going to be a challenge for organizations and companies in Pakistan. And another key challenge or relevant challenge could be the hurdle of overcoming the deeply, I would say, the profit-centric mindset, and developing an organization-wide commitment for sustainability reporting. So these are the few key challenges that we believe would be around the implementation of IFRS S1 and other standards in Pakistan. And we believe that addressing these challenges requires a phased and collaborative approach, and emphasizing with emphasis on capacity building, stakeholder engagement, and resource optimization. On the other spectrum, the sustainability reporting also offers companies some incentives, and there could be significant opportunities for businesses. For example, access to green finance can be that the entities can have access to green finance, like they can attract ESG-focused investors and green bonds. Then the alignment with IFRS S1 will enhance credibility and opportunities in international trade and investments. The reputation of companies can also increase, as it can enhance corporate reputation by demonstrating commitment to sustainability, and which will build trust with consumers, with stakeholders, and global partners. Another important element is the export competitiveness, especially for the textile sector or the sectors which are involved in exports, can increase with sustainability reporting that is aligned with IFRS S1, and as the global buyers' sustainability expectations would be met. Then another perspective could be better risk management, because with proactive ESG-related risks and opportunities, the risk identification would enable timely mitigation strategies. Then the data-driven and the use of information, more data-driven information for boards and managements would give them opportunity to align their long-term sustainability goals. Around sustainability reporting also ensures adherence to global and local sustainability requirements, which will reduce the legal and reputational risks. And if we look at the employee engagement, there have been many surveys which have indicated that the companies which are on the path of sustainable growth and which have sustainable practices in terms of ESG, they attract and they retain talent compared to other companies. So, for example, companies like Unilever have reported an 80% employee engagement rate due to their sustainability initiatives. Then talent protection and retention are also easier for sustainable companies. Well-being of employees also leads to increased productivity. So there are many incentives. However, in the first or the early years of implementation, there would be significant challenges. And that's why I believe that SCCP has outlined a phased approach for adoption of sustainability standards. A way forward would be that we, while implementing the standards, first of all, understand the requirements of the standards. Then we can consider what sort of risks and opportunities around sustainability or ESG factors our businesses have. And then we also need to educate our board or the top management about this area, this space. Uh, and then comes the evaluation of our internal processes, where we stand to meet the requirements. And it will also help us in identifying the gaps, to filling those gaps, which will also involve engaging with other stakeholders, with other process owners within the company, expanding our processes, expanding our systems, data collection protocols, and hopefully with all this we will be able to execute and report as per IFRS S1 and S2. This is a suggestive way forward, and there's no sequence, no specified sequence. It doesn't give specified sequence. It's the idea is that we can follow this to have a streamlined execution and implementation of sustainability standards. Lastly, KRW and resources, future collaborating, and through a combined team, we can assist you in sustainability reporting. And I will request Roma to explain the support we can offer to help you navigate this process effectively. Thank you.
Thank you, Sohail Saab. This was very enlightening, and also I really enjoyed the examples that you gave. I think it was very necessary for understanding the requirements of S1. So before we conclude, just a little about our services. So together, KRW and Resources Future are offering capacity building on S1, S2 standards, as well as other standards that are used in conjunction with IFRS S1 and S2. And we'd be happy to customize training for your organizations. Secondly, I think I see questions on sustainability metrics as well in the chat. So one of the areas where we help is doing a baseline assessment so that you can quantify and measure your data, and you understand what are the systems necessary to collect it. So this includes sustainability, climate related data. Then we also help with materiality assessments, where we understand that stakeholder engagement is very important in identifying material issues for your organization. And furthermore, we help you develop a disclosure plan as well as assist you in sustainability reporting with these standards, as well as other standards such as SASB and GRI. And lastly, once your company or organization has reported and has a baseline, then if you want to be ambitious and set targets, we can support your organization in that as well. So with that, we conclude our session, and I see a lot of interesting questions in the chat box. I think we won't have time to review all of those, and I think a few were already answered through your presentation. So one was around climate-related risks. I think when you mentioned transitional risk, so there was a question by Zara Khan, and he says, wouldn't the climate-related risks be part of IFRS S2 disclosures? So I think he wants to know why we are discussing it for S1.
The relevance of S1 is that when we discuss strategy, so they have specifically mentioned that if you are discussing strategy, then you need, for climate-related risk, spell out that whether this is a physical risk or transition risk. So example of a physical risk is like physical loss, like, for example, because of flood or fire. While the example of a transition risk would be because of the market factors, because of the reputation, changing consumer demand needs or demands, or the loss of reputation because of our non-compliance with sustainability requirements. This is the example of transition risk. Another example of transition risk would be the regulatory imposition. So if government of Pakistan, as an example, imposes some carbon taxes or fines on entities, so there's a risk that if we do not follow the climate-related requirements and our emissions are not within the parameter that has been set by the government, then we are exposed to, or we carry the risk of fines. So these are the few examples, and I mentioned that in my slide because that's specifically provided for climate-related topic. Thank you.
Right, thank you. And just to add to that, S1 is basically a general requirement. It tells how to report, so it's aligned with TCFD. And S2 is used together with S1 to report climate-related disclosure, so it's still relevant here. Then we have a question, is it about risks impacting business operations or how the businesses that are impacting the ESG? I think they want to ask if we are discussing, if IFRS calls for financial materiality, impact materiality, or double materiality.
Yes, the concept is that the risks that are going to affect us, the business, this is the concept within IFRS S1 or within the ISSB standards, and it's different from what the European standards contain. They have the concept of double materiality, that what we are impacting and what is impacting us. So there's a different concept within IFRS S1 or within the sustainability standards. It's the impact that the factors have on our businesses. And an important element within this is that IFRS S1 talks about value chain. So this is not only the, as an example, it covers the downstream and upstream side. So value chain means that if I obtain a resource or a raw material, for example, from Bangladesh, so what sort of sustainability risks that entity has? So that's also my risk in a way. So this is what value chain means, and we need to see through our entire value chain, and then we will be able to come up with our sustainability risks and opportunities. And it's one of the most, I think, challenging aspect of adopting or implementing sustainability standards within any jurisdiction, including Pakistan, to outline and to identify sustainability-related risks and opportunities within the value chain. And in a way, it will also result in implementation of the standards across the entities, because if one entity has to follow the standard, then it will expect its risks to be reduced. And for that, it will require the entity within its value chain to also follow the standard and to reduce its risks in a way. So this is another important element of ISSB issued standards. Thank you.
Right. Then I think we'll take two more questions, and one is by Laiba and other is by Hafsa. I think they're asking the same thing about how we can benchmark and how the sustainability metrics are quantified and measured, what skills are required. So basically for sustainability metrics, you would need GHG experts, sustainability analysts. So this is a lengthy process, time-consuming process. You would want to conduct LCA, carbon accounting as well, and also compare these with standards and industry peers. So for instance, we have guidelines by GRI as well as SASB on how to do that. So definitely you would require a special technical skill set for this. And like I mentioned, this is where we come in as well to support the companies. And the last question, I think this you could answer, Sohail Saab. What qualification should a firm have to issue assurance report on sustainability compliances?
SCCP, when notifying the adoption of IFRS S1 and S2, that is the sustainability reporting standard, has also mentioned that the assurance report on this sustainability should be as per the assurance standard that is adopted by ICAP. This is what they have mentioned. And we know that internationally, besides the sustainability reporting standards for companies, on the assurance side, a standard has been developed specifically for sustainability reporting, ISSA 5000. And anyone who is going to report or issue an assurance report on sustainability report of a company has to follow this standard. And generally, in Pakistan, the assurance practices or the issuance of report is done by ICAP members or those who are licensed by ICAP to issue the report. So this is the general practice, and I believe, or to my knowledge, probably this trend will follow. However, as of today, no one has been specified or identified for sustainability report, assurance of sustainability reporting. But based on the earlier trend and the earlier regulatory regime, probably those who are licensed with ICAP.
Okay. Thank you, Sunil Saab. Before we conclude, this recording will be available on our YouTube as well. I have mentioned the link in the chat box, and we will also be posting this on our LinkedIn. So thank